How do we know how many people get on? Oh,
All right.
It doesn't matter. There might be none, but they'll join later.
Yeah,
I mean,
they'll be.
just,
We're actually going live like right now, I believe. So you just jump over to YouTube and then we'll get started. You just do live dashboard. All right, it's started. All right, let's go ahead and jump in, David. So everybody,
do an intro.
We are actually trying to do our first live stream from Bitcoin Profits and our Crypto Caffeine channel. So tonight, guys, we are going to hear from David Werner, DARYL Young, and Troy Bell, and we're just going to kind of use this time to visit a little bit about the crypto market, what's going on, what's happening, and then you guys can get to know us a little bit more on a personal level as we visit during this next short period of time. But to get started, I've asked David to kind of jump in and give us a little bit of update about the crypto industry and some of the stuff he's been working on. I'm going to jump back over to Skype, David, and then they should be able to see you there. So David's the one right there in the upper corner. So I'll turn it over.
Can you see me okay?
Yep, we can see you.
Yeah, so here's the thing that I found interesting is I've been out traveling. I was in New York last week. I was in Tokyo the week before that, working with some different companies on crypto projects. And when I was out in New York, the big subject was what's going on with compliance in crypto, right? What's going on in the token markets? Are tokens legal in the United States? What's a utility token? What's a security token? Which one of them can we buy? What exchanges are listing tokens? Are there tokens that will be delisted from exchanges? Are exchanges legal in the United States? Which exchanges are operating? So there's a lot of stuff surrounding that. On 2 days ago, on the 22nd, the SEC chairman spoke at a hearing, and he opened up his testimony with a reprimand to the ICO community, and particularly to the attorneys that were representing companies that were doing ICOs. Basically said you've got a duty to make sure that you're not, you're vetting this outright, whether or not it's a security token or a utility token. So, what's high on my mind is what's the future of tokens in the United States, and what does that mean for investors? And I think that what it boils down to is the Securities and Exchange Commission is going to be basically taking the position that a token is a security because a company is selling a token to raise money. So any of these token raises on the planet Earth, where you can go buy a token from their website for the purpose of them raising money, then the SEC's opinion on that is that that's a security. So it's not a bad thing. It just means that companies in the U.S. are going to have to, if you're a U.S. company and you're going to do a token sale, or you're talking to people that that are about to launch a token, or they're in the process of an ICO and they're in the United States, regardless of whether it's a utility or they claim it's a utility, as far as the SEC is concerned, it's a security. So,
define a security, Dave.
Well, here's the thing, right? If you start doing your research on this, you're going to run across what's called SAFT, which is a simple agreement for future tokens. And SAFT is a best practices model put together by some attorneys out on the West Coast. Cooley is leading that, Marco Santori. There's a white paper on it. They've got a GitHub site. And the idea behind SAFT is you're not selling the token to the investor. You're selling an agreement for the investor to buy a token, right? Which is a security, so you're fine. But at the end of the day, once your token is built out in your platform and you're going to go on the exchanges as a utility, then that's when the investors receive that token. But a security, DARYL, is basically anything that is sold for the purpose of raising money where the person purchasing that interest has a promise of gain.
The idea behind SAP is...
What's that?
Sorry, David. Go ahead.
Yeah, or what has to pass or fail what's called the Howey test, which is a few questions that basically says, am I buying this because I'm expecting it to increase in value, right, Daryl? So, so it can be something as simple as that. If you're buying it with the anticipation that it's going to increase in value, then the Securities and Exchange Commission says, hey, that's a security, right? So what does that mean for these companies out there that are not in the United States, that are on the exchanges, and that investors in the United States are buying these tokens? Well, that's the dilemma for the Securities and Exchange Commission. There's really no exchange in the United States that's offering vetted securities tokens. Up until
right?
Just recently, right? That's the next evolution that's coming down the pipe. Will be some exchanges opening that will be purely for the purpose of a crypto asset that's a security token.
But when that happens, what you're saying then is those exchanges will be 100% vetted, legal, and but a security token, according to the interpretation, often this kind of the discussion up in New York is that a security token is a security token. You're selling it to raise money. You can't also have that token inside of your platform functioning as a utility, because then you would be paying out someone as a commission in the form of a utility, which is a security, because you just sold it as a security, right? You follow me on that? Yeah. So, but doesn't that go against the grain with every single ICO, it seems like, out there? Because almost all of them are preaching how their token is part of the utility. And now they're saying if your token is part of the utility, then you have issues.
Yeah. Yep. So here's the scoop on that, is that I think what I'm hearing, again, and I'm not giving a bunch of people legal advice. I'm not an attorney. I've just spent a ton of time with these attorneys and with a bunch of different groups that are going through the process, and that is that you can't even if it's a utility, and you come out and say, hey, my token's a utility, and we're now going to have these tokens be sold and listed on exchanges, that there's still the issue of, well, what's the definition of a utility? And that's a gray area, because if you start looking at what that means, that's open for interpretation. So but here's the bottom line. New York, the United States, I mean, the broker space, the investment community wants to get in and be able to trade a token as an asset on an exchange. Why not? Why miss out on the opportunity to trade? We have the stock market. We got futures on Bitcoin that are trading now. So the answer to that is we need those type of exchanges in the U.S., and we need products on those exchanges, which comes in the form of tokens that are securities-based tokens. So all that really says is this. I'm going to now raise money for my project. I'm going to make it a securities token, which means it's just like an equity, like a stock, except it's a token. I'm registering it through a 506C or a 504, depending on what my number is, but I'm treating it like a security. I'm selling it to qualified investors. They're signing my PPM. They're doing all that stuff, right? So it's no different than as if I was selling shares. The difference is there's an exchange for liquidity that's available, that token can go on to maybe sooner than later, where investors right now only have the option of liquidating their ownership in companies through an IPO or through a company going public over the counter, or ultimately NASDAQ, or some of those different things. But a securities token has to have some form of value tied to the company. And in other words, what's the benefit of buying the token and owning it, in your platform?
Yeah,
and
so
And,
Yeah,
you know,
so
they're
the
not gonna-
value of that token somehow pegged to the dividend or revenue of that company that creates value.
That's correct. So
Yeah.
let's just assume that you treat it like a dividend. Now it's going to be based on performance of the company. It feels like a stock, but it's not. It's traded like one, but it's not.
So in that case, would the company be buying back the tokens and burning them? If
No.
they're gonna liquidate those tokens in the marketplace at the value that the company's allocated towards that token in the form of a dividend?
The company doesn't set the value on the token. The market sets the value on the token. Just like a share price, you know, a company doesn't say the price of our share is $200. They sell their shares when they're raising money for whatever value the market's willing to pay for those shares. So the market sets the value of those tokens. The fact that it could earn a dividend potentially or a distribution, like that, all that means is that if the company performs and does well, then the token holders are rewarded for that, in addition to what the value of that token might be on an exchange. Now, when you look at exchanges, you got to ask the question, well, how do I get my security token on one of the big exchanges like Phoenix or Kraken or something like that? And the reality is well, you're probably not going to. And a lot of those exchanges, what the SEC's intentions, I think, is going to be to go after those exchanges that are listing securities and letting them delist them or else suffer the consequences.
So that kind of is the whole world of ICOs and tokens and kind of an update on that. Some of that may have just went over a lot of people's heads, but that's not how technical this is going to get. But for some of you guys that are looking and doing a lot of research on ICOs, that's good information to know. That's awesome. So,
especially if you're going to go do your own project, you want to know that that there's a way to do it right, but the markets are evolving. The opportunity in crypto in the United States is just beginning.
So let's talk. Can we talk about that for a moment? I've got that leads us right into the next one. I have an image of Bitcoin that I'm putting up on the screen, and this is one that DARYL sent me over, and it basically shows Bitcoin like shooting up, and then it just starts dropping down again. DARYL, I was wondering if maybe you could talk about that for a minute, and then I can switch over to the emotional side of trading. But give us an understanding of what we're looking at here on this image.
Okay, so what you're seeing is, most investors are like so 95% of them, or probably more, are emotional investors that will trade out of fear of missing out or trade in a bear market where they have a fear of losing it all. And so everything's emotional. And so this what you're looking at there is it's a Wall Street cheat sheet, and it's a pattern that happens over and over again with emotional investors. Since emotional investors take up most of the trades, it follows this. So if you look at the top there, the euphoria, like we saw that at the end of December, it cracked 20,000, it's going to get hit 50. And what happens is some of the skeptical ones or people who short it might be unloading. They might have bought in at 600, so they're starting to catch in at 20,000, and it creates a huge drop. And so it kind of shocks the market, but it comes back up again. We hit this complacency thing. It's going to go back up again. And then it drops. And so you can see the emotional roller coaster here. It goes from complacency and denial and panic. And I think we're probably in the panic stage right now, or maybe in the anger as it starts to solidify, consolidate. And so we're probably going in a sideways market now. So in the last week, we've been hitting 10, 11, 12 up and down.
So DARYL, let me throw that Bitcoin chart up right next to that one. So that came off of the Wall Street cheat sheet. So if I pull up the Bitcoin one, let me just do that real quick. look at that, guys, how close of a trend that is
it's pretty much exactly the same.
It is. So, it's almost like to the T. So you can look right at that chart on Bitcoin and you could see right about where we are in this process. So does it mean that Bitcoin's gonna blow up in a bubble? What is it? I mean, all this anxiety, denial, panic. With that comes all the rumors and all that stuff starts kind of building up in the market. But that's not the end of it, is it? It kind of keeps continuing.
This is called a cheat sheet because it's a cycle. If you go through the sideways part there, the anger, depression, then it goes into disbelief. And then there's people seeing the patterns as, oh, it's consolidating. And they start getting hope. And they start seeing the price rise into optimism, belief, thrill, and euphoria. And it's we will go through this process again. And I think if you look at the simplified market graph there, just on the top, that little color thing, every time it hits a peak and goes down, it always rises to a larger peak after that. And I think the biggest thing about Bitcoin is the price of Bitcoin itself isn't the value of the industry, what's going on. The value of the industry is actually the blockchain, what's carrying it. The blockchain is what gives Bitcoin its value. And so the Bitcoin price is just a symptom of our interaction with the blockchain. So the blockchain will never, ever disappear. We've hit this new part. It's like, you know, when the printing press came out, information started being decentralized, where the churches held onto the Bible and this information was centralized to the people. We have the truth. You need to listen to us. And that's why a lot of the Bible book burnings were happening way back then, because the information was being decentralized. And as Wall Street and the different bodies trying to crush Bitcoin, they're trying to disseminate the fear, distribute the fear amongst everyone. And it's kind of similar to the Bible burnings back then. They're trying to get rid of that decentralized information. So if you see that the real value is in the technology, not actually the Bitcoin, you can see that Bitcoin is just a symptom of the value. And it's going to up and down, and it will keep rising up. And what was interesting, just this last week, PayPal, its CEO, said that he thinks that Bitcoin will be $1 million. Now, when that will be, if it's going to be next decade, next couple of decades, or whatever. But there's been a lot of analytics going on, and they say in the next 10, 20 years, the average of it in the next 10, 20 years will be between $50,000 to $275,000. That's where it will be sitting. So cool. That's a symptom of the technology again. Once we know what we're sitting on, we don't have to panic. The rest of the world will panic. The rest of the world will go in these complacency, anxiety, denial, panic stages, but we just sit there and just go along with the ride.
I think that's nice, because when you look at that chart and you realize where we're at with Bitcoin, you can sit back and not freak out. You can say, oh, this is all part of the process. Bitcoin's sitting at 11.4 right now. All right, it had to do a pullback in order to grow even higher. So that's interesting. So we talked a little bit tonight, guys, about what's happening with ICOs and tokens and some of the legal framework around that. Daryl's talked a little bit about the Bitcoin, where we're at on price with it, and not to like everybody freak out over it, that it's going to continue to grow. But Daryl, Troy, we have you. Yeah, so tell us a little bit about what's going on in your head tonight and what you're thinking about all this.
Sure. Well, kind of breezing through the news today. I'm looking at some stories, and we've always known about the banks and how they feel about Bitcoin. You know, there's a few banks that are signing on to the concept, like USAA and people like that. But there's a new story out now called "The Bank's War on Virtual Currency," who's really at risk. And really what it's all about is some major credit card banks like Capital One and Metropolitan Bank they've become the latest to join in on the Bitcoin bashing and the all-out war on Bitcoin. And this is potentially a big thing because what they're going to do is if you try to buy some coin on Coinbase with a Capital One credit card or a Metropolitan Bank credit card, specifically those two, they're not going to process your transaction. You know, they say it's a risk of fraud and things like that. And you know, really, what it really is, as we all know, is who's really at risk here? It's really the banks that are at risk, right? Because they're not getting in on the action. And
yeah,
and
interesting.
You know, it's becoming more and more you know, they either need to get on board or get left behind, and that's kind of a big story this week. It actually hit the wire on the 15th, I guess. But you know, so it's that's one of the things we got going on, and you know, that's going to be more. We're going to see more and more of that until they just figure out that, hey, you know, if you want to go along for the ride, you got to be part of the wagon everybody jumps on, right? So that's one of the stories. You see, Nebraska. I don't know if you guys have heard about this. They're aiming to. They got two bills on the table to regulate Bitcoin. I'm just seeing this for the first time. Neither one of them are friendly to Bitcoin or any other virtual currencies. So Nebraska is kind of. Let's see if I can get you a little script here.
What are they doing up in Nebraska, man?
I don't know, man. I thought they were supposed to be like shucking corn or something, you know, corn huskers.
If there's anybody out there from Nebraska, you got to make your voice known. Get out there and
that's right.
Be an advocate.
Yeah, it's. Let's see. Give me a second here. It says January 8th, Nebraska Virtual Currency and Money Laundering Act was introduced, and just 3 days later, an additional provision to adopt the Uniform Law Commission's blah blah blah. Okay, so what they're doing without they want to make the use of virtual currency a felony. Just a transaction is used in a financial crime. Well,
well, hasn't that always been the case?
That's always been the case. Yeah. So you know, I really don't know why they decided to waste the taxpayers' money on that, because unless they're just trying to do it at the state level, it's already a federal crime, right?
So let me get this right. If you commit a felony with Bitcoin, then you know it's going to be a crime. Okay, got it. All right.
Yeah, right. Let's check that off the list. You know, all right. That was in the early adoption stage, right?
Yeah.
Bitcoin. You know, that's what kind of gave it a bad name in the first place. You know.
Yeah. So what's your take on where the market is, Troy, right now, in terms of sentiment? Is it pro? Are you seeing a lot of anti stuff out there this week?
You know, everybody's seen the market take a dive over the last couple of weeks, kind of up and down, kind of volatile, just like the chart that DARYL was just showing. But you know, now, you know, the way that we all talk about it, it's like a time to buy more. You know, it's a buyer's market right now.
It's like everything's on sale. You know, you just go down and go do your shopping.
It's like a garage sale, right?
Yeah. So
especially Ripple. You know, Ripple's down quite a bit. It's not down to where it was a few weeks ago, but you know, it got up to almost $3. And
so David has a prediction. He thinks Sia Coin's going to start moving on a pump. So with these new A3 miners and
right.
And so, what do you think about that?
Yeah, well, you know, you and I have discussed that recently. There's another individual that we watch on YouTube, and he just got his first couple of ant miners, and he's killing it. Early. Well, there's plenty of it to mine out there, right? So
let's maybe that's a good segue into the last part of this, and then we'll wrap it up. But mining. I mean, there's a whole market of mining out there. What's happening with mining right now? Anybody want to chime in and kind of share your thoughts, David? You've been heavy into researching mining. I have myself. Is it good? Is it bad? Is now the time? What's some of the challenges that people are getting hit with right now when it comes to mining? So, any thoughts on that?
Well, yeah, go try to buy a GPU at Fry's Electronics.
Exactly. Hey, I tried that.
So for some of you that may not understand exactly what we're doing here, let me go ahead and I'm going to share my screen real quick. Okay, and behind me, guys, these are actual mining machines, and what they're talking about with GPUs, and I'll just kind of zoom in here, is a typical miner has graphic cards in it instead of like processors to actually do the mining. And so this mining rig right here, you can see that it has 6 GPUs. Now each one of those GPUs, had you went and purchased them, let's say a month ago, you would have paid going rate on them, which would have been anywhere from $700 to maybe $800. But what's happened in the last month is those same GPUs have basically ran out of stock everywhere. And in the process, the price has been driven up to twice that. Some of these cards are selling for $1,800, $1,900 a card, and it's just brutal because anytime you go and mine, you have to consider your ROI, or when you actually pay for your equipment. And when you're paying those higher fees, the ROI calculator gets pushed way out, and then you have to ask yourself, is it worth your time and energy to mine? So it's just an interesting thing. If you're lucky enough to have got into mining earlier on, you stand at a much greater opportunity than those that are just jumping in right now. But it's interesting. I ran some calculations today on an ROI on a rig with today's pricing, and if you ran real efficient with everything, and you could open air cool it, and not have to cool it with electricity per se, or much electricity, you would ROI in about 170 days. So it's still profitable, because if you think about it like that, you could literally double your money in 1 year. If you invest $12,000 into your rig and you run it all year long, by the end of the year, you will have gotten about $24,000 out of it. And so it's still profitable, and that's why you cannot find a single GPU card on the market. As a matter of fact, let me jump over to my browser real quick, and I'm just going to go over here to Now in Stock. And this is a website that helps notify you when things are in stock. And I'm going to click on NVIDIA, because this is one of the graphics cards that you use. And I'll just click on the GTX 1080 there, which is another card that you would use. And you'll notice everything on the screen says out of stock, out of stock. This is every major retailer on the market is out of stock. And so
pre-order.
There's some pre-orders, but there's only one pre-order. Everything else is out of stock. And so that's the challenge with mining today, is getting a hold of the equipment and then being able to it's not just video cards, it's your ATX power supplies, it's motherboards, it's RAM, believe it or not, RAM, and all of the stuff around that. It's just very difficult to get. And so for some of you that are thinking you want to jump into this, you need to do your research ahead of time and really make sure that this is something that you can pull off and it makes sense to do, because you're going to dedicate a lot of time to sourcing product, and some of that product's going to take weeks, if not months, to arrive to even get into the industry. Now, there's another challenge outside of that, and that's knowing what coins to mine. And for some of you that are still sticking with us, I'm going to share with you a couple of little secrets. there's a site that I'm pulling up on the screen, and it's called Coin Wars with WARZ. And what this site does, it shows you the difficulty levels of coins to mine. Now, what you have to think about this is that if everybody goes and jumps on one coin because it's a hot coin, then the difficulty goes up on that coin because you have a lot more people mining it. The challenges to win the block and all that fun stuff goes into play. So when another coin pops up that may be affordable and everybody jumps ship and moves to it, then the difficulty level on that coin starts dropping, the original coin. So it's being able to research and understand a little bit about that. And this is a great site that shows you the difficulty level of the individual coins that you can mine. And if you can find some, like I was looking at Zcash, and what's interesting about Zcash, and it's unlike any other coin. And I've always wondered why so many miners mine Zcash. And when I saw this chart, it totally, like the aha moment went off, and I said, that is the reason why so many people mine Zcash. But as this pulls up, I want you to look at this and tell me what you see. If I can get it to pull up. Oops. That's not the one I want. That's our spam window. But what you see is this rapid up, down, up, down, up, down, up, down. And what that tells me is it's a lot of automated trading. And a lot of automated in the mining that's going on. You can see that people mine it to just about, let me see the number, just about 8 million on that chart, and then they stop mining it and it drops back down, then it drops all the way down to 6 million. And it's so predictable. So you can literally... Is
that the market cap for Zcash?
Yeah, this is the difficulty in about where they're mining. And I'm not totally up on everything on this, so it's great homework assignment. But what you do see here, Troy, is a constant up and down, up and down, up and down, up and down. And if you, so that's difficulty right there, right? That's showing that at one point it was really high, the difficulty was high, and then the other point it's really low. And you could almost literally, when it drops, you can mine it. When it goes up, stop mining it. When it drops, mine it. When it goes up. And so there's stuff like that you got to get dialed in. But what's cool is, Troy asked a good question. Is that market cap? Is that this? And I just found this site today, by the way. That's how much of a newbie I am to it. But what's interesting is there's actually some really cool sites to help miners to not have to go and learn everything under the sun on what to mine. And that website is called What to Mine. And in this website at the top here, you have an area where you can put in what type of GPUs you're running. And I put 13 1080 Ti's here. And then these underneath this, you'll see things that say the different equihash, and you'll see all these different, what they call algorithms, right? And these algorithms are what you can mine with, and different coins run on different algorithms for mining. So when you find a coin and you click this calculate button, you can put your actual numbers of what your GPU rig's producing in hash rate, and how much wattage you're using, how much your daily cost is, all that fun stuff, and it'll calculate your earnings, and it will then tell you which coins you can mine over here. And you'll see underneath the coin name, it'll say Equihash or Neoscript, because those are the different algorithms that they're running on, and you know that you can do the calculation on that coin using that algorithm, and it'll tell you how much you can earn per day mining that coin. So there's some great tools out there for stuff like this, and it basically to just help you dial that in and know a little bit better about the mining process. Now the reason I'm kind of throwing that out there, guys, is because Bitcoin Profits, our training company that does a lot of Bitcoin trainings and seminars around the country, they're actually coming out with an entire course on Bitcoin mining in addition to Bitcoin street trading. We're right after this live broadcast, we actually go into our classroom where we have students from all over the country that will gather together that have attended one of our seminars, and they learn a topic that we teach. And tonight we're actually teaching what's called street trading. And street trading is where you can actually act as a seller of Bitcoin to people in your local community, and you can earn anywhere from 5 to 10% on that by purchasing the Bitcoin from the exchange and then reselling it to people in your community and actually creating a business around that. So if you want to learn more about that, we've got a website called bitcoinprofits.io that you can visit, and that'll kind of give you an idea of where our next seminar is and what's going on with it. But it's a ton of fun to come out and learn with us. And for those that might be watching this live broadcast that's about to join our call, it is starting here in 20 minutes. But I kind of wanted to just wrap this up, guys, and just let everybody know that there's just a lot of opportunity in the crypto market. Whether you're a day trader, whether you're getting into ICOs and trying to understand them, if you're just following the market trends like what DARYL talked about, charting the graphs and knowing where we're at in the process and you're just investing for the long term, or if you're more actively involved and you're doing mining and you're actually out there building rigs and mining and earning money and so forth, there is opportunity all around the crypto space, and that's what makes it such a great living environment for all of us to kind of jump in and enjoy. So with that being said, we're going to wrap up this live broadcast and just hopefully you guys enjoyed it, and we're going to try to do these and get more of them out to you so you can understand a little bit about what's going on weekly and what's going on with the crypto market specifically and kind of what Bitcoin Profits is doing. So anyhow, thank you, Troy and David and everybody for jumping on.
Thanks, you guys.
Any last comments anybody wants to share?
No, go out and start doing it.
Hey, go out and start doing it. All right. Well, great. Well, thank you, and then we will visit with you guys later. Bye.